Good morning and welcome to the webinar on fuel tax credits, the role of technology in maximising returns, sponsored by Teletrack Navman. My name is Michelle and I'll be your webinar moderator today. Today you will be hearing from Peter Perich, Director, PPM Tax and Legal Pty Limited. Peter is one of Australia's leading fuel tax credit advisors and co-creator of the Teletrack Navman FTC Manager software. With more than 18 years experience, he has assisted hundreds of clients to claim many millions of dollars worth of fuel tax credit refunds from the ATO and maximize their ongoing fuel tax credit entitlements. As one of the very few advisors in Australia that works solely on fuel tax credit matters, over the last decade, he has had significant experience working with transport fleets of varying sizes. In addition to his extensive work with transport operators, he has also assisted a wide range of clients across a variety of other sectors, from large multinational mining companies to small business owners and sole traders. Like always, we'd love to hear from you during today's presentation. If you have a question, please feel free to type in your questions in the Q&A section at the bottom of your screen. You may send in your questions at any time during the presentation. We'll be answering the questions at the end of the session. So welcome, Peter, and over to you.
Thanks, Michelle. Welcome, everybody. Today, we're going to have a bit of a chat about fuel tax credits and how we can maximise our returns using technology. It's particularly important in the current environment of high fuel costs to make sure that we're all recovering what we're entitled to. As Michelle mentioned, I specialise in fuel tax credits. I'm one of few people in Australia that practices solely in this area and have had many years experience on this. So let's jump in and just have a bit of an overview, and then we'll talk about some of the specific technology measures that we can use to really make sure you're claiming everything you're entitled to. Fuel tax credits, what we're talking about is the rate of excise that is levied on the fuel that we all purchase at the pump. So it's up to nearly 48 cents a litre, and that increases at least twice a year, February and August, typically in line with the Consumer Price Index. So you can recover that amount of excise that you use for fuel in your business, but the rate at which you can recover it depends on how that fuel is used. You get it all back if you use that fuel in an activity that is other than for travelling on a public road. So that could be in yellow goods or generators or machinery and equipment, or it could be in your vehicles for the portion that they don't travel on public roads. You get that full 48 cents a litre back. If you're a heavy vehicle travelling on a public road, you get a reduced rate because a road user charge is taken out of the amount to cover the additional wear and tear that those vehicles cause to public roads. So it drops down to around 20 cents a litre. And if you're a light vehicle, you can't claim anything for your on-road portion. So this all presents difficulty in claiming in that we really need to be able to apportion our fuel usage between activities rather than just between the types of equipment. If we can do this really well and quantify how much fuel is used in each activity, then we've got an opportunity not only to increase our ongoing claims, but also to maximise refunds for fuel that you've already purchased in your business over the last 4 years and claim that as a lump sum amount. Before I jump into the technology, I'll just quickly go through some basic concepts. So when we're talking about fuel tax credits, we separate all fuel using assets into one of three categories. Your machinery and equipment is anything that doesn't travel on public roads, and you're entitled to the full rate of excise on that. It's typically pretty straightforward, just a matter of summing your litres in those items of equipment and multiplying by the off-road FTC rate. The other two categories, heavy vehicles, which is above 4.5 tonne GVM, and light vehicles, which is equal to or less than 4.5 tonne GVM, will require apportionment between the activities in order to really maximise your claim. What am I talking about when I talk about the activities that those heavy and light vehicles can conduct? Well, again, we can probably separate these into three main categories. So one is travel, obviously fuel used to propel a vehicle, we would consider it to be travel. A second being idle. So when the vehicles are stationary, they're still burning fuel, and it depends on where they're burning that fuel as to your entitlement. And finally, with your heavy vehicles only, doesn't apply to light vehicles, we can apportion fuel to operating auxiliary equipment. Auxiliary equipment is any moving parts on a heavy vehicle that use fuel produced initially by the main engine for a purpose other than propulsion. So we're talking about things like tippers or water trucks, fuel trucks, garbage trucks, cement trucks, EWPs, street sweepers, etc. Anything that's got moving parts that use fuel other than for propulsion. So when it comes to the travel and idle activities, again, there's sort of two locations that travel and idle activities can occur. You can either travel or idle on public roads or off public roads. Now, this is still a bit of a grey area. The definition of public roads was last tested in 2019 in a Linfox case. And the courts basically ruled that a public road is a road that is available for use or generally accessible as of right by members of the public. So some public road areas are pretty straightforward, but there's others that are a little bit grey, and we're still hoping for some more definitive ATO guidance on this in the coming year, hopefully. Private roads, pretty much anything that you cannot access as a member of the public, anything that's gated or signed. There are specific exemptions for roads such as mining access roads or forestry roads, which are considered to be private. But yeah, it's an important distinction to be able to maximise your FTC claim, because obviously you can claim a higher rate when you're using that fuel off of a public road. So how do we actually go about apportioning fuel usage between activities? There's basically three main areas that we need to apportion. So firstly, we look at the fuel used in your heavy vehicles, and we need to apportion that between operating auxiliary equipment and traveling. So this only applies to vehicles, of course, that actually have auxiliary equipment in the first place. And you've got two options. You can apply an ATO specified safe harbour percentage, or you can use any manual method that's fair and reasonable. So to give you an example, if you operate a tip truck, you can simply claim 5% of your entire fuel usage in that truck at the higher FTC rate and 95% at the lower FTC rate without any further substantiation in reliance on that practical compliance guideline 2016/11. Or you have the opportunity of measuring it manually. And when we measure it manually, you might get an increased return. Typically, I see tip trucks anywhere from 5 to 25% off-road, depending on what sort of operations they're actually doing. So although you've got to put a bit more work into it, you're going to get more of a financial return. Similarly, in terms of apportionment, we also look at the travel and idle and apportion between being on and off public roads. And this is really where the rise of technology in the last few years has a really big part to play. So what methods can we use? So the ATO does give us guidance on how to apportion fuel usage. There are basic methods, which is constructive, deductive, for example, where you either add up or subtract your fuel usage. Most people go with a percentage use method. But what's important to note here is you need to have some substantiation behind that. The ATO particularly doesn't like when they see things like 50-50, 60-40, 70-30, really guesstimate type percentages. There's got to be some substantial rigor behind that, because if you get audited without that, you could be in a bit of trouble. The rule in terms of what's acceptable is that anything that is fair and reasonable in your circumstances will be accepted by the ATO. Again, it's quite grey, and it's something that can be argued either way. Most importantly, I guess, in recent times, there's been a big development in terms of GPS-based technology using GPS tracking devices to identify when you're on or off public roads. And we're going to talk a little bit more about that. In terms of accepted ATO measures, I've got a few listed there from the ATO guidance, and I've highlighted two in particular that I'm going to talk about. But just before I get there, some of the other ways that we can measure, we use things like odometer readings or route distances, hours of operation of equipment. You can use manufacturer specifications if you can get them, but they're very difficult. Probably the most frequent way that we measured entitlement for apportionment purposes before the development of GPS technology was by doing fuel consumption trials. That's essentially, filling the vehicle up, operating it under typical conditions, and recording how much fuel it uses in each activity, be it idling or operating the auxiliary equipment. Of course, that's a bit painful and time consuming and takes your vehicles off the road, so we try and avoid that where possible. We've also in the past used things like questionnaires for drivers to guesstimate what percentage of travel is on and off public roads, and the ATO previously has accepted them. However, in recent years, with the development of this technology, they're requiring a lot more substantiation, and they won't accept things like questionnaire responses anymore. We really need some hard evidence. And the way that we do that is using the GPS technology and some specific applications that have been developed in recent years, as well as data from the engines of the vehicles themselves. So all vehicles will produce data through their CAN bus, and they can report this in a number of ways, and we can use that data to maximize your FTC claims. Now, having said all that, it's important to note that the ATO has significantly increased their audit activity in recent years. Unfortunately, a couple of years ago, there were a few GPS providers that were claiming to provide fuel tax advice and were using GPS technology, perhaps not in the most optimal way to maximize their customers' claims. And this resulted in a number of overclaim assessments, penalties and interests. I've actually been contacted by 3 different customers that had over $1 million in overclaims because they relied on data that wasn't accepted by the ATO. So it's really important in this current environment to make sure that you're getting it right. And we've really got to focus on those apportionment methodologies, the underlying data and fuel consumption rates, and making sure we're keeping records. Also, in recent times, there's been a strong trend towards these GPS-based technologies, and there are more GPS-specific FTC software entering the market, such as the FTC Manager, which I've been a part of. There is some guidance on the ATO website for this, but by and large, it's not complete. They only tell you little bits of the information, and it's up to you to apply that yourself to maximize your claims. Now, really importantly in this area, Taxpayer Alert 2021/3, which I'm going to talk about in a bit more detail. This arose on the back of some of those overclaims from GPS providers that were providing fuel tax advice, and the ATO has put out a position telling taxpayers what to look for when they're using their GPS technology for FTC purposes. So having a look in a bit more detail at that, some of the ATO's concerns were around the incorrect classification of non-public roads and public roads, and I guess GPS providers not updating their mapping data frequently enough. There was also concern around the use of sample groups which weren't representative of the whole. So maybe testing 2 or 3 vehicles out of a fleet of 50 odd and applying that across the fleet. So the test there is what is a fair and reasonable sample of vehicles performing similar activities. There was also concerns around incorrect assumptions, algorithms, fuel consumption rates, things like GPS providers that used algorithms to figure out what a vehicle did when it left a public road between satellite pings. There was a bit of a crackdown here because where you have data that is not second by second, and you have a ping off a satellite every, say, 1 minute or more, there's no real way to tell what happens in between those. And we've got to be really careful to make sure we're not overstating our FTC entitlement. A big one as well that they spoke about in that alert was the failure to reconcile source documentation and business records. So FTC claims always have to start with the amount of fuel that you acquire. You cannot claim for more litres than you have purchased, and that must always be the starting point for all FTC claims. When it comes to GPS technology as well, there were some providers that weren't actually accounting for data limitations. So what happens when there's an error with data, which will occur from time to time, or if you're out of coverage, etc. Something that needs to be considered. And then finally, there was some incorrect use of the ATO safe harbor method. So at the moment, one thing, I guess, to come out of Taxpayer 2021/3, so we have the concerns there. But over on the right there, the ATO recommends that taxpayers consider whether any FTC technology being developed either in-house or via a third party has a product or class ruling. So that's really interesting. They're recommending you go with the provider that has that ATO support. And at the moment, there's only a few that are active in Australia. So Teletrack Navman's FTC manager has both a product and class ruling. It's the only one in Australia that has a product ruling. The reason that's important is that it supports not only the data produced by the hardware, which is what is supported by the class rulings, but it also supports the apportionment methodologies that we put on top of that to make a claim. There are also a couple of other providers in the Australian market that have class rulings, and I believe there may be some further ones on the way. All right, so specifically, what are we talking about when we're talking about the use of technology for FTC claims? There's two sort of parts to this. I guess firstly, we've got general telematics. So most people are familiar with the rise of telematics. There's a number of providers throughout Australia. The first thing I'd suggest is checking out the TCA website, Transport Certification Australia, to see which GPS providers have TCA approval. So, you know, anyone can go to China and buy some GPS hardware and make a user interface to provide a GPS tracking service. But what sits behind that? And it's TCA's job to certify different providers. So I strongly recommend that you use a GPS provider supported by TCA. When you're looking to use that data for FTC purposes, you've got to consider a few things. So what type of data are we talking about? Is it that second by second HD data? Or does it report in 1 or 5 or 10 minute intervals? Because that's probably not going to be enough to satisfy the ATO. What's the accuracy of the data? So this is measured in things like HDOP, the horizontal dilution of precision, a bit above my head, but basically number of satellites that are applied. What sort of level of data accuracy do you have? Is the device actually hardwired into the vehicle so it can't be tampered with, or is it simply a plug and play into your OBD, your onboard device? How often do the maps get updated, and what is the base layer of that mapping? Where does it come from? And if you're just going to be using your telematics, and this I'm just talking about the base tracking services that many telematics providers use, do you also need to figure out if you need fuel consumption rates? So I guess telematics might be able to tell you the kilometers that vehicles travel on or off road, or the time that they spend idling. But to get that into litres, do you need to know a corresponding fuel consumption rate? So that's a number of things just to bear in mind when you're looking to go with a telematics provider, and one that's helpful for FTC purposes. But there's also taking that a step further. There's also the development of FTC specific applications. And there's only a few of these that are active in Australia at the moment, with FTC Manager being the only one that actually currently has an ATO product ruling. So considerations here are, does the system comply with that taxpayer alert that we were speaking about? And does it have a class or a product ruling? Are you using a system that uses actual data for ongoing claims for each vehicle, or does it just use an average across the fleet? Do you get just the pure data, or is there an element of FTC consulting advice attached to that? So it's all well and good to get some data, but how do you convert that into dollars? I think it's really important this point that if you're going to a GPS provider and you're getting FTC reports, you want to make sure that there is some sort of partnership or advice from an FTC advisor. The way that FTC Manager is operated is that TeleTrack Navman produces the GPS data, and we at PPM, in partnership with them, administer that and convert that into a dollar claim by providing FTC advice. So make sure you've got somebody that is advising on that data and is not just directly coming out of the GPS system with no FTC consulting eyes going over it. What else do you need to maximize your claims? So even with some of those specific applications, you might still need data, for example, from the engine of a vehicle. So there's a number of things to think about when you're purchasing GPS data. The other way that we typically use technology to identify, to maximize FTC claims is through the use of what we call EMS, Engine Management System, or VPM technology. This is essentially data that comes from the onboard computers of all vehicles. Vehicles are getting smarter and better as we go every year, and you can find a lot of information on fuel usage from the newer vehicles. The advantage of using this technology is that it's pretty simple. It comes straight out of the engine of the vehicle, and you can run reports. So the ATO love that as a record to support your claim. And it allows you to measure the hourly fuel consumption rates of vehicles, or take a percentage sort of approach. And I'll show you a live example of EMS technology in a minute. The only problem with the EMS stuff, two problems. Firstly, typically you're going to have to pay for it. So most engine manufacturers will have their own proprietary software, and they may charge a fee for running a report or require you to subscribe to their service to get that additional data. So there can be an additional cost there, and it might not be available for all engine types. Particularly older vehicles might not actually produce the fuel consumption data we need in the first place. All right, so what are we actually talking about here? What we're looking for is data from the engine of the vehicle that tells you how much fuel is consumed in different activities. Now, typically these activities will be drive, idle, and PTO. So we're looking for fields like the PTO fuel used as a percentage of the total fuel used. That gives us a percentage method for calculating PTO. Or we can flip it around and look at the PTO used as a percentage of the engine time, and that gives us a burn rate in litres per hour. So we could then theoretically combine that with a measurement of how many hours that PTO has operated during the period, and multiply it by your burn rate, and you can claim that way. So that's essentially what we call the hourly rate method, and we've also got the percentage method. Some examples of what we're talking about, it varies by engine manufacturer. So the example I'm going to show you on the next page is from the Cummins engine from the Insight system, but each different provider has its own different version of these reports. There's a number you can see in front of you there, but we're really looking for the same types of fields, and I'll show you those on the next slide. in front of you, you've got an example of a typical Cummins engine report, and you can see a number of fields there, and I've just highlighted in red the ones that we need. So we're looking at sort of total fuel used, idle fuel used, and PTO fuel used. And if you just get those, that will allow you to calculate a percentage of fuel used in each of those activities. If you also add in the engine runtime and the idle time and the PTO time, we can convert those into a burn rate in litres per hour. So in the example here, this vehicle uses about 8% of its fuel for idling. What we don't know at the moment, though, is how much of that is on-road versus off-road. And it also uses nearly 20% of fuel in its PTO. Doesn't matter if that's on or off public roads, so we can straight away claim 20% of that vehicle's fuel at the higher FTC rate. If we look at the fuel consumption rates, 2.87 litres an hour when idling. Most vehicles will idle between 2 and 4 litres an hour, so that's pretty standard. Heavy vehicles, that is. And while it's engaging its auxiliary equipment, it's using, more than 11 litres an hour. So if we can use GPS technology to measure the number of hours that that vehicle idles, or that vehicle is operating its auxiliary equipment, then we can multiply by that fuel consumption rate and calculate FTC entitlement in each category. A little bit complicated, but I think hopefully that makes a bit of sense, and all of the reports from different providers will look a bit different, but essentially they're the sorts of fields that you're after if you want to maximize your FTC claims. Limitations. So everyone needs to be aware that there are just inherent limitations with GPS technology products. There is no system that is ever 100% correct, just like there is no map in Australia that is ever 100% correct, given the number of changes that are happening to our roads on a daily basis. And the ATO acknowledges this. It's all about having systems in place to be able to deal with that. So you want a provider that has a stated process for what do they do when a vehicle goes out of GPS coverage, or what do they do when a vehicle goes into a tunnel, or there's just an error with the satellites. So something to be aware of. Again, we've spoken about the incorrect classification of public and non-public roads, still a very grey area. So if you're not sure, I'd recommend seeking advice on what is a public and what is not a public road. There's also, as I touched on before, the limitations with satellite pings that are not second by second. So anything more than second by second will need to use an algorithm to guesstimate fuel used between satellite pings. So we've got to be really careful around that. And the ATO says that there's a number of checks that you as taxpayers are required to do before you lodge your claims. So it's not as easy as just taking the data from the GPS provider and making a claim. They expect you to do a few checks on that as well. So most importantly, if you're unsure about any of this stuff, I recommend seeking advice from an FTC advisor. So how do we go about ensuring compliance? Well, going back to the taxpayer alert, this is what the ATO says they are doing. We are checking FTC claims which appear to have been prepared using a GPS or telematics technology product and which exhibit the types of issues set out in this alert. Where necessary, we will make adjustments to those claims and may impose penalties and interest. So that's the ATO saying that they're increasing their audit activity on GPS providers. What should you do to protect against this? Well, firstly, you've got to consider whether the concerns apply to you. So is the GPS provider you're using exhibiting the types of behaviours set out in that taxpayer alert? Also, just do some checks on your FTC claims. Don't just take the data from the provider, lodge your claim and assume it's right. You've got to be a bit proactive. If you do find errors or you're not sure and you want to reduce penalties and interest going forward, recommend making a voluntary disclosure. The alternative is just to hope that you don't get audited in the next 4 years. And then we call that running the gauntlet in the industry. but to be honest, we strongly recommend if you identify errors that you make a voluntary disclosure. If you see any people or marketers or GPS providers exhibiting those types of behaviours, please, the ATO encourages to report them to the ATO. But most importantly, just give consideration to whether the product that you're using is covered by an ATO product or class ruling. And as I mentioned previously, there's only a few that have a class ruling, and only one that has a product ruling. If you don't do this, if you don't use a provider that's covered by a product or class ruling, this is what the ATO wants you to do. And to be perfectly frank, I think this is overkill, but this is what the ATO states in that taxpayer alert. Firstly, they want you to check your GPS data daily and make sure it doesn't contain any anomalies. Now, they consider spending more than 6 minutes idling at a warehouse to be excessive. My experience shows this is just not the case. We've worked for hundreds of transport operators over the last decade, and certainly 6 minutes idle in a warehouse is not a maximum in my experience. So what the ATO is saying there is that if you don't have a product or class ruling, you should be checking your trip data and only using those sort of maximums. We don't have that problem with FTC Manager as it's supported by the ruling. You should also check your daily excessive distances and idle times. And if you do have an idle time in excess of 6 minutes, they wanted you to produce things like warehouse entries or some sort of other additional records to support that. Now, commercially, as I have made them aware at the ATO, this isn't very practical, because you guys as taxpayers, you buy the GPS units to give you that information. You don't need to then support that with other paperwork. It's hopefully to replace all of that paperwork, but that's again what they've said in that taxpayer alert. Really important one, make sure you've never claimed for more fuel than you've purchased. I've seen that a few times where we use a dollar amount rather than litres. We've got to always claim based on litres, otherwise you'll run into problems. Check those fuel consumption rates that you're using. Don't just use guesstimates of, oh, hey, I think my heavy vehicle idle's at 4 litres an hour. You need to support that through some of the technology that I've been speaking about previously. Make sure that you haven't used an ATO safe harbour method and a manual method at the same time. So it's one or the other. If you've got a tipper, you can claim 5% off-road, 95% on-road, or you can use a completely different manual method to get you whatever percentage you do, but you can't use both at the same time. And for future claims, there is a bit of guidance on the ATO website that they want you to consider, although as I mentioned previously, it doesn't really tell you everything. And finally, they say, if you're uncertain about anything, seek a private ruling about the application of your GPS software product to your specific circumstances. So just finally, in terms of staying compliant and how to keep the ATO off your back, use GPS technology where you can. Seek a provider that's got a product or class ruling. Look for a provider that only uses HD second-by-second data. Look for a provider that has hardwired devices that can't be tampered with. Does that provider have a partnership with an FTC advisor, or is there some sort of FTC advisor that converts the data into FTC claim dollars? Fuel consumption rates. Don't use rates that are unsupported. That example of 4 litres per hour for my truck. You need to have rates that are supported by some sort of testing or engine data. The EMS data is typically the best because it comes straight from the engine and it's hard to challenge, and the ATO really like it, but it's not available to all vehicle types, and it may be a bit expensive in some cases. So other ways we can do that without cost, but you do have a time cost. Live consumption tests of fuel consumption for particular vehicles, and make sure you've got appropriate sample groups when you're doing the testing. 3 out of 50 might not be reasonable, but 15 to 20 out of 50 might be reasonable. It just depends on the circumstances. Record keeping, make sure you're keeping details of all your FTC workings, and that includes all of those fuel consumption rates and GPS data that sit behind it. Really, please don't use 50-50 on-road, off-road in any FTC claims, or 60-40 or 70-30. It's just a red flag to the ATO. There needs to be more rigor behind those percentages. And make sure you're reviewing the methodology regularly. So I would recommend at the absolute least every 2 years. Yearly would be ideal, but anytime there's a significant change in your business activities, you should review the methodology you're using. And finally, if you're not sure, seek advice. So typically your accountant will only delve into the high level FTC issues. There are limited FTC specialists in Australia at the big 4 accounting firms, here at PPM, and there are a few other little boutiques around the place. But I strongly encourage you to seek advice if you're not sure. Michelle, that's it from me for today. Thank you everyone for listening. I think I'll throw back over to you and see if there are any questions that I can answer before we finish up.
Great, thank you, Peter. Yes, we do have a couple of questions. The first one is, what is the typical cost involved, and how long does installing TeleTrack Navman for one owner-operated truck take?
Good question. So firstly, I'll preface this by saying I focus purely on the fuel tax credit rather than the actual sales side for TeleTrack Navman, and I'd encourage you to start with their website in terms of information around that. But I can give you a broad idea. It depends on the type of service you require. So whether you require compliance under the IAP program, whether you need a tablet in the vehicle, or whether you just want tracking. But I think it's sort of, upwards of $35, depending on how many add-ons you want to have to install a truck, somewhere around that, if you're doing it per month. You can also buy them outright. Yeah, I think, does that answer the question?
Yes, thank you. And the second one, what are some key safety features of TeleTrack Navman's all-in-one technology solution, and what benefits does it offer regarding compliance and risk reduction?
Again, not my core area of expertise, so I'd encourage you to reach out to the TeleTrack Navman website. But in terms of safety features, I do know there are a number of cool features that they have, such as driver scorecards, which measure things like fatigue and excessive speeding and harsh cornering and all of that sort of stuff, looking at driver behaviors. You can get alerts from different GPS units. There's a range of different camera technology that's coming out, either forward or rear facing, or even looking at the driver's eyes to make sure they're not nodding off, that sort of thing. In terms of compliance for heavy vehicles, there's access to the IAP program. There's lots of features around mass management and that sort of thing. So the scope of what those GPS devices can do is truly huge. I've seen the large number of reports that are in the system, and most customers don't even scratch the surface on the capabilities and the benefits they can get from using those devices. But yes, I really encourage you to reach out to the TeleTrack Navman website, and they will point you in the right direction for someone with a bit more knowledge on the product than myself.
Great, we have another one. What is the cost structure of having your FTC reviewed by PPM? Initial cost and ongoing cost? Who should we contact?
Sure. Well, you can contact me directly if you're interested. Typically, in terms of costs for the 4-year retrospective period, we would charge 20% of any refunds we find. So no upfront costs. If we don't find any refunds, you don't pay anything. And once you get that claim, we charge you 20%, and we handle any audit with the ATO that might come up as a result. The ongoing component, if you're using the FTC Manager software, there is a monthly fee, and it varies depending on type of vehicle, amount of fuel usage, and size of your fleet, but between $5 and $15 per vehicle per month. Now, to put that in context, from the roughly 350 retrospective reviews we've completed in the last 5 years, we're averaging around $70 benefit per vehicle per month. So $70 minus your between $5 and $15 per month is where you're going to end up in terms of net benefit on average. Of course, every business is different, but I'm happy to speak to anyone directly and try and get a bit of an estimate or an assessment of the likely benefit before proceeding with any of that advice.
Great, thank you, Peter. We don't have any more questions, so that concludes the webinar today. Thank you again for presenting, and thank you everyone for attending. Thank you also to Teletrack Navman for sponsoring this webinar. If you have any questions, please send an email to info@natroad.com.au, and we will make sure that Peter gets that and he can get back to you. And today's webinar will also be uploaded to the Natroad website, and it will be there will be a link in the newsletter going out later today as well. Thank you very much again, and have a great day.
Thank you.